Good morning, everybody. This is Avinash H from Shakti Institute of Financial Markets. I am a chartered wealth manager by profession, and today I am going to brief you about the basics of stock market. See, a lot of us are afraid of stock market because we don't know a lot of things about the stock market. Stock market is like an ocean. If you have to get a cup of water from an ocean, you have to put a lot of efforts. So usually a lot of people lose money in the stock market because of lack of knowledge. This course deals with a lot of basic aspects like what is a primary market, what is a secondary market, stock exchange overview, how many stock exchanges are there in India, and a brief introduction about them. Then initial entry into the markets by clients. How we can enter into a stock market, how we have to start trading. So what are the requirements for that? What is a trading account? What are the trading methods? Then introduction to derivatives market terminology. So if a person who doesn't know anything about stock market, he can undergo this course and he will be equipped with a lot of knowledge. A lot of people, they are willing to invest in market. They also want to make money by trading or investing, but because of not having sufficient knowledge about the financial markets, they are left behind. They are hesitant. So let's move ahead. Primary market means what? Primary market is something which is the first stage of a company in entering stock markets. Primary market is a opportunity given to the company to raise the funds. For example, if there is a company who wants to who requires some funds to expand its business, it can either go to a bank or a financial institutions for loan. The second thing is it can raise funds through equity shares. So there are two equity shares. So the promoters, they will dilute their holding in the company, and those shares will be given to the public through primary market, and they are called as initial public offer or initial public use. Then a secondary market, it is a place for sale and purchase of shares and stocks. Soon after the completion of primary market stage, the company shares company will be listed on the stock market, and once it gets listed on the stock exchange or the stock market, it comes under secondary market. So in secondary market, you can buy and sell the shares whenever you want. Primary market, you have to apply for the shares and you have to get it from the company directly. In secondary market, investor sells to investor. Then the investors can hold them for long term and short term in their DEMAT accounts. In secondary market, you can buy the shares for to sell them in the very short term, then or you can hold them for long term. So then exchanges in India, there are two exchanges. One is National Stock Exchange. The second one is Bombay Stock Exchange. Both are located in Mumbai. So National Stock Exchange is India's one of the premier institutes, and it is India's largest financial market established in 1982. They deal with Nifty 50 stocks. Then Bombay Stock Exchange was established in 1875 and is called as Asia's first stock exchange and one of the India's leading exchange groups. They deal with Sensex 30 stocks. See, whenever you see the markets are up or down, you will see an index. We'll come to know whether it's up and down by seeing its index. Both these exchanges have their own indexes. NSE has its index called as Nifty 50. Bombay Stock Exchange has its index called as Sensex. Then there are some terms used. One is the bull market. When do we call it as a bull market? Bull market is a market in which share prices are rising continuously and encourages buyers to buy the stocks. At this point of time, at some point of time, if the stock prices are rising continuously, we call it as a bull market. And if the prices of the shares are falling continuously, then this is called as a bear market. You have to calculate these things for a broader term. For example, last 1 year, 2 year, 3 year, what is the market? Since 2014, our market is in a bull phase. Now, the next question is why to invest in stock market? Stock market में investment क्यों करना? To maximize your returns, then to beat inflation, to keep pace with the inflation, and to reach financial goals with the right mix of investments. If we keep our money in a bank FD, we can't maximize our returns. And as you know, there is an index for inflation also. Inflation is nothing but it is the expenses, overheads which we incur on a monthly basis or a yearly basis. So the index of inflation is around 6 to 7%, and the returns on FD the bank will be giving you will be 7 to 8%. So whatever returns you are earning on your FD will be eaten up by the inflation. So you should invest in a product which beats inflation and which will keep pace with the inflation. It should be giving more returns than the inflation. And to reach financial goals in the long term, you have to compulsorily invest in stock market. And the next question is how to invest in stock markets. Usually, a lot of us don't know how to go about in the stock market, how to invest it. So the first step will be DEMAT account. DEMAT account has to be opened, which is a compulsory mandatory thing done by SEBI. The term DEMAT refers to a dematerialized account. In a DEMAT account, shares and securities are held in electronic form instead of taking actual possession of certificates. Earlier days, we used to deal with certificate forms. Shares were in physical form, but nowadays everything is in electronic form. To hold all your shares and other things in a single account, DEMAT is required. So, who will open a DEMAT account? The account will be opened by the registered broker, who is regulated and professional broker who buys and sells shares on behalf of investors. So a broker or sub-broker should be a registered broker with SEBI. Then there are two types of trading. One is delivery trading and second one is day trading. So when you purchase stocks with the purpose to hold them for more than a day is termed as delivery trading. When you buy or sell stocks for intraday with an obligation to square off your position in the market, the same day is known as day trading. As you know, market starts morning at 9:15 and ends by 3:30. If you are going to buy in the morning and sell before the market closes, then it is called as a day trading or intraday trading. If you keep it as a delivery for more than if you keep the shares for more than a day, they are called as delivery trading. There are 5 ways of growing money. One is by investing in a business. One is investing in a real estate or giving loan to someone or investing in a bank or post office FD. Also, investing in securities will grow your money. Business, if you want to do a business, then at least 5 to 10 lakhs are required, the minimum capital level. Then for real estate, if you are going for a real estate, then you have to at least have 15 to 20 lakhs in your hand as a capital. Giving loan to someone's, I think this can be done with any amount, but it's not assured one, risks are there. Investing in a bank or post office FD will earn you and only up to 7 to 8% or below 10%. But investing in securities over the long term will yield you much more than anything else. When this was a brief about our basic course, there are a lot of things we tell in that. So if you are interested, then subscribe our channel and email us on our ID sifmdharwad@gmail.com. For more details, you can WhatsApp us on 9686199524 also. Thank you.